Have you ever realized just how complicated you've made trading? Seriously, think about it. You pick charts, hop from one indicator to the next, trying to decipher patterns that vanish as quickly as they appear. Caught in a web of confusion, drowning in data, you're left frustrated, wondering if there's even a path to profit. Here's the deal. You don't need that complexity to succeed. Countless traders drown in a sea of intricate indicators, convinced they need just one more algorithm to crack the code. But clarity outperforms obscurity every single time. You don't need 100 tools to figure out the market. You need a couple of solid principles to guide your moves. Let me share a story. There was a trader named Liz. She started off like many, overwhelmed, jumping from strategy to strategy. Every time she thought she had it nailed down, something changed and she was back at square one. One day she stripped it all back. She stopped obsessing over the newest indicators and went back to the basics, just price action. And you know what? That's when everything fell into place. Simplifying her approach and focusing on the essentials allowed her to finally find her rhythm. The noise quieted and she started seeing opportunities clearly. Now let me ask you, what if you could strip away that complexity for a clearer path to profit? What if you could find success without wading through a swamp of unnecessary tools? Let's dive into what truly works. What if everything you know about trading tools is just noise? Sounds crazy, right? But hear me out. If you're feeling overwhelmed by tech indicators and complicated charts, you're not alone. Most of that stuff just muddies the waters. It's time to simplify. I'm talking about the raw power of price action, the most potent tool in your trading arsenal. Understanding price action isn't just a hack. It's like reading the pulse of the market. It gives you the insights to make informed decisions, cutting through the clutter. Think about it. When you look at a price chart, what do you see? Sure, it's lines, coloured bars, and signals everywhere. But underneath that, price is telling a story. It's a reflection of supply and demand in real time. Imagine you're in a room full of people talking and suddenly you tune into a single voice, cutting through the chatter. That's what price action does. It strips away the noise and reveals what's really happening. Let's take a quick look at a visual, a price chart versus an indicator-laden chart. On the price action chart, it's clean. You see clear trends. Upward movement, higher highs, higher lows, all screaming uptrend. Now contrast that with the indicator-packed chart, buzzing with signals but failing to give you a clear direction. It's like comparing a river flowing freely to a muddy swamp. Which would you rather navigate? I think you know the answer. Now imagine seeing profits by embracing this simplicity. What does it feel like to trade with clarity? No overthinking. You look at the chart, see price making higher highs, and boom, it's an uptrend. You don't need all the extra noise. So what's next after this revelation? How do you turn newfound clarity into actionable trades? Let's dive deeper. Are you tired of feeling lost in market trends? Trust me, you're not alone. Many traders look at the charts and think, what is happening? Am I the only one who doesn't get this? If you want to cut through that confusion, start by recognizing market structure. It's the cornerstone of your trading strategy. Think of it as basic geometry for the market. Uptrends are like triangles climbing upward, while downtrends slope down. Easy peasy, but here's the kicker. If you don't recognize what you're looking at, you're lost. If you don't know whether you're headed uphill or downhill, how can you steer your trades? You can't. That's why understanding market structure is critical to avoid despair when trades go south. In an uptrend, the price is making higher highs and higher lows. That's your visual guide. You see those ups, that's your signal that things are bullish. In a downtrend, it's lower lows and lower highs. That's your cue that the mood is bearish. But hold up, just because you see a dip doesn't mean it's time to panic sell. I see traders make that mistake thinking, oh no, it's a downtrend. I need to jump ship. Guess what? They miss the actual move, or worse, lose money. Remember, the only way to confirm whether you're in a valid downtrend is by breaking the previous highs. Get that right, and everything else clicks. It's like a roadmap for your journey. Following those major highs and lows keeps you on the right path. Now that we're grounded in market structure, let's talk about the magic of supply and demand. How does that sound? What's the biggest mistake you're making entering trades? Yeah, I know you've heard a lot of conflicting advice and you're stuck trying to figure it out. But if you're not tuning into supply and demand, you're flying blind. This is like the secret sauce that can make or break your trading game. Think of supply and demand as a game of tug of war. You've got buyers on one side, sellers on the other, battling for control. When demand outstrips supply, prices shoot up. But when supply overwhelms demand, boom, down they go. Understand this, and you're already ahead of most beginners following the crowd. Picture a chart. You'll see zones where prices flip. That's your battlefield. The market reveals its intentions through powerful signals. Huge price spikes. Those are like a neon sign saying, pay attention here. Spot those supply and demand zones. When prices rally from a demand zone, it's like fighters catching momentum. And when they crash from a supply zone, that's where sellers stomp out the competition. Let's break it down with an example. Imagine we're looking at a chart where prices shoot up after hanging at a low. What's happening? Demand is kicking in. Enter at that point, and you're likely set up for profit. But here's the kicker. Nothing's certain in trading. You must understand how to manage your risks effectively. So how do we handle that risk to ensure our trades pay off? Let's dive deeper into that next. Do you realize how quickly a single bad trade can wipe you out? It's wild, right? One moment you're riding high, and the next, your account is free falling. You might feel like you're on a roller coaster, but there's a big difference between enjoying the ride and getting thrown off. Risk management isn't just a safety net, it's the backbone of your strategy. Listen, if you don't have a solid plan to protect your capital, you're setting yourself up for failure. What's the point of making money if you're just as likely to lose it all? I've seen too many traders crash because they thought they could wing it or had too much confidence without a backup plan. A friend lost half his account in a day because he didn't set a stop loss. Classic rookie mistake. He learned the hard way that without risk management, you're not playing to win, you're playing to survive. Let's break this down. Risk management can seem overwhelming, but it boils down to a few simple principles. First, stop loss orders. Think of them as your parachute. When you jump out of that trading plane, you want to know that if things go south, this parachute will save you from hitting hard. Imagine you're cruising on your dream vacation, everything's perfect. But then you take a wrong turn and suddenly you're lost in an unfamiliar city with no backup plan. That's trading without stops. You need that exit strategy. Set a stop loss at a level where you're willing to accept the loss, but don't set it blindly. Be smart. Look at support and resistance levels and decide where the price action suggests it makes sense to cut losses. You may have heard of the 1% rule, where you only risk 1% of your total capital per trade. That's a great starting point. Protect your capital so that one bad trade doesn't knock you out. But it's not just about stopping losses. Understand when to take profits too. Sometimes traders hold on too long, hoping for one last tick. Don't fall for that trap. Have a defined exit for taking profits. Locking in gains is just as crucial as cutting losses. Let's fire up some relatable stories. I once watched a trader leave too much on the table, convinced the stock would soar. They had a winning trade, but turned it into a loss without a firm exit in mind. They lost big over greed. Recognize when to pull the trigger and secure gains. Now here's the kicker. Knowing the rules and strategies is one thing. But can you recognize winning setups in real time? That's the test. You might have the knowledge, but when the market is live and volatile, can you trust your gut to act? That's what we'll tackle next. Stay tuned. Ever felt the rush of pushing the buy button, only to dread watching losses pile up? You're not alone. Many traders experience that heart-stopping moment when all excitement turns into gut-wrenching fear. You might sit there questioning your strategy, wondering if you should even try. But here's the deal. It doesn't have to be this way. Let's get real. The hard truth is this. Many are caught in the trap of theories without execution. You've read the books, watched the videos, and maybe even memorized indicators. But when it's time to trade, it's like your brain short circuits. Trust me, I've been there. There's power in seeing real charts and real results. I once had a strategy that was a hit back-tested, but when I hit that buy button live, panic set in. Now picture this, a chart in an uptrend. Price makes higher highs and higher lows. Beautiful, right? That's our winning setup. But suddenly it turns, the price crashes, and where once you saw profit, now feels like doom. What if I told you this is the moment to learn? In real trading, you not only need to recognize what a winning setup looks like, but also understand what a losing setup reveals. Think about it for a second. A winning trade often comes from understanding market structure and demand zones. You enter when the price dips into a demand zone, where buyers are lurking, ready to pounce. That's where the magic happens. Now flip that scenario. Imagine a losing trade where you don't recognize price is still fundamentally bullish, even if it dips temporarily. Traders get caught off guard. They panic and sell, thinking it's dropping further, only to miss the rebound they could have profited from. This is where the rubber meets the road. Seeing the strategy in action changes everything. I've had trades where I entered on the right setup and it blasted my take profit. But on the flip side, I've been the guy watching price plummet after a bad entry, thinking, what was I doing? So, we've laid the framework. It's time for the mindset shift required for success. Let's gear up, roll up our sleeves, and dive deeper into applying these principles in real trading. Subscribe to Trading Strategist, the new best trading channel on YouTube, and like this video. I'll see you in the next one. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.